Hello everyone, a very good morning, good afternoon and good evening to all. Myself Vaibhav. In today's session of automated trading, we will be continuing to work with the awesome oscillator. This is the fourth part of the ongoing series for this week, which we started on Monday, and I hope, of course, you are well familiar with the awesome oscillator's functionality. It is simply a momentum indicator which tries to gauge the underlying driving force and help us identify the trend and reversal. Along with it, we will be using the ATR. ATR is simply the average true range, and it will help us gauge the volatility of the instrument for that particular session. Min-max is simply the lowest and the highest value over a specified period of time. It's a statistical indicator. Before we go into the details, this is simply a standard disclaimer, and I would like to remind you that this is a tutorial session, and whatever algorithms which we will be developing during the session are simply for tutorial purposes, and no claim is being made regarding the profitability or otherwise of the algorithms shown during the session. And suppose if you want to use any of it for your own particular trading account, I would suggest that you do extensive trial runs and then also keep it running for mock run on demo account for good enough time so that you get an clear cut idea of how it is functioning, it is executing the trades as per the requirements or not. And of course, nothing in the webinar is to be constructed as an advice to trade or for any particular setup. Let's get started now. We will take a brief look, brief recap of our underlying strategy. The strategy has been simple. We are simply trying to go for short sell trades when the oscillator is in the bearish territory, when the negative values are falling. Till then only we will be looking for short sell, and when the value starts rising, we will stop trading. We are not going to go for buy. Buy trades will happen only when the positive values are rising, and again the trading will stop after this value starts to fall. This ATR is going to be used on the daily time frame, and we are going to use yesterday's ATR, that is with shift 1, and I have explained the rationale behind using the yesterday's ATR as well in the earlier session. This is now on the hourly setup. Here the logic is pretty much similar. We want to go for short sell only when the negative values are falling, and go for a buy trade when the positive values are rising. But now that is a simple setup, but we want to make sure that our entry and our exit is optimum. So for that we have to bring in lot of stuff. We have to design the basic parameters which will help us get the trading price, the price which is optimum from the risk reward perspective as well. So we are not doing this thing from point of view of simplicity. We want the trade setup to be optimum. So here, if the other conditions are fulfilled, then here the trading can happen. We can go for a short sell trade, but as you will notice that if we go for any sell trade, as soon as the value starts to fall, then you will realize the condition will be fulfilled around 9 GMT of 18th March, and 9 GMT is this candle. So and I think it will close, then it will be, the price will be somewhere close to 1.097. but what happens from 1.097, it goes to rise till at least 1.1018, that is more than 40 pips. And suppose if we were to go for a trade straight away at these valuations, then I think most probably we would have ended up in loss. And for this particular reason, we are bringing in the next condition that the last tick value should be within 20 percentage point of the yesterday's ATR. We are going to set in that condition. So from highest point of last 4 hours, we will be calculating the 20% of the ATR, and then only we will be executing the trade as and when the price will touch that level. So sometimes the trade will happen, sometimes it won't happen, and fortunately here the price is indeed going to be within the 20 pips, 20% of the ATR in these hours, and since the semi oscillator will be still falling, the trade will execute as and when the price will get closer to this min-max zone. Also, one more condition is that the maxima shouldn't be rising, so we have to try to make sure that when the momentum has shifted, when the new highs are being made, the trade shouldn't be getting executed, and for that simple purpose we have brought in another condition that the maxima should be equal or lower than the last hour's maxima. So we will allow the cooling off time period, and then we will go for fresh trades. And also we will bring in 10% of the ATR to make sure that as and when the price reaches that zone, the trading will stop. One more condition is that we are trying to make sure that only during the initial hours of the start of the trend, the trade is going to get executed, and for that we are going to compare the current trend with the trend 5 and 6 hours back, 6 and 7 hours back. So we have also tried to make sure that, and after the run has happened, after the price has fallen, the algorithm will stop trading after 6 hours have passed, and no trade will be getting placed on the lower side after the passage of time. Suppose sometimes it is possible that even before 6 hours the trend reversal happens. In such scenario, other parameters will help us minimize the losses. It's not like that we will be continuing to suffer losses regardless of the price action. We will plan accordingly for that. And now is the time to take a look on the setup so far. This is the Visual JForex platform, and here we have built this setup in last 3 sessions, and this is simply the standard instrument subscription. We are going to use the Euro USD. Position amount has been defined at 0. These are four hourly blocks of the awesome oscillator. As I explained, we are going to go with the major trend, and for that we are going to compare the values of the awesome oscillator. Shift 1, that is 1 candle period back, and shift 2, 2 candle period back. We are going to compare these values, and we want the values to be rising for buy trade and values to be falling for sell. And this is a similar setup on the hourly time frame. The ATR is there for last yesterday, with time period being defined at 14, and it will help us gauge the volatility. These are historical candles here. This will help us make sure that last candles are closing as per our requirement, and we are trading with the trend. The awesome oscillator again on the hourly time frame, shift 6 and shift 7, as I explained the rationale while explaining the chart setup. This is 10% of the ATR. Here we have done the calculation, and these are min-max values. Shift 0, the current min-max value. Shift 3, the 15 minutes back, and shift 12. Shift 12 is 1 hour back, and we will be comparing these values. And this is the minimum min-max difference, which we are going to define at we have already defined it at 30% of the ATR. The difference between minima and the maximum for last 4 hours at least should be the 30% of the daily price range, the ATR. Now we will need to bring in 1 minute. I think we can make do with 10 seconds also to define the entry and exit price. So here I will explain to you the rationale on the 5 minutes. So what we are going to do, we are going to make sure that suppose if we are going for a sell trade, then we will make sure that the current maxima is equal to or lower than the last hours maxima, that is 12 period back of the 5 minutes. And it will make sure that when the prices are falling, we are not going for a sale. Only when the price stabilizes, we are going for a sale. And we are also going to compare the current maxima to the 15 minutes back, and that will we will simply put in the condition that it should be equal, so that the current volatility is minimized. And then what we will do, we will subtract 20% of the ATR range from the maxima. So we are not going to sell on the higher side. We are trying to make sure that whenever the price will be falling, whenever it will be moving away, then only we will be trading. So we will subtract 20%, or we will define the difference. And when the price using the 10 seconds candle, we will make sure that one candle is closing. We will draw a line, a kind of virtual line, which will be below 20% of the maxima, and we will simply check the last candle and candle prior to that, and we will do the calculation, and then the trade will execute at that valuations. So let's get to work now. We will need to bring in the calculation expression to define the virtual line, and then we will also need to bring in the and here we want we have the min max, so we are going to need the info candles, get historical values, shift 1 and shift 2, and then we will do the calculation as well. We are going to put in the minimum value of 10 seconds here, and this is bid for the buy side and the sell side. We can use bid for both the sides, or we can even use it separately, like bid for a buy trade and ask for sell trade, but it will work fine regardless, I think. Or okay, we will bring in two more candles, not much an issue. It will be more clearer to you and to me as well. Here we will make it shift 1, the last candle, and then this will be the penultimate candle to shift 2. And here we will change the upper side, we will make it ask. We will be utilizing the ask values for the sell trade and the bid values for the buy trade. We change it to 10 seconds. And the shift 1 and shift 2. So this will be the requirement, and now we need to do the calculation. That is, we need to deduct 20% from the 20% of the ATR from the maxima, and then we will compare that value with last candle closing value. And when we are going to look for a buy trade, we will simply check the last two candles closing levels. Here is the calculation expression. And let us take the ATR value and we will multiply it by 0.2 to get the 20% of the ATR, and then we will subtract it from the maximum for the sell trade, and for the buy trade we will add the 20% of the ATR to the minimum value. So ATR is here line 20, and we will need to create a new variable now. The new variable can be named the ED, execution difference, and it will be 0.2, 20% of the ATR. So we multiply the line 21, the ATR by ED, and we get A1 into A2, and let's make it as F AD, ATR execution difference. Okay, so we will need to utilize this result to add or subtract from the maxima and the minima. So this is AED, and again we bring in the calculation expression, and this time around for a buy trade, let me explain to you on the chart the rationale behind it. When we are looking for a buy trade, what we will do, we will add 20% of the ATR value to the minimum value, and that will take us somewhere on the upper side depending on that day the ATR, and then we will check the 10 seconds candle. So suppose for let us assume that after adding 20% of the ATR to the minima, we have got the price at 1.09. So suppose if 1.09 is our level, our desired level, then we will check the last 10 seconds candles. Whenever for a buy trade, let me allow the chart to load. It's taking too much of a time. Scan the bid. Oh god, okay, we got it. So, as I said, if 1.09 is the price, then we will check the last candle close. It should be above the 1.09, and the penultimate candle, the candle prior to that, with the shift to, it should be, its candle closing should be less than 1.09. So when that will happen, our algorithm will execute the trade, and vice versa for the sell trade. Whatever the defined price, suppose if it is 1.093, then we will check the last candle close. It should be less than the 1.093, and the prior candle should be above 1.093 on the 10 seconds. So these are assumed values, and this is how the setup is going to work. So again, let us go back on the Visual J Forex, and we will be now taking the minima and maxima values. We want the current values for the maxima and the minima. So let me check if these are bid price, bid and the low price. So here we will take the minima for the current candles minima. This will be the minimum value of last 4 hours, as the time period is 48, and the candle period is 5 minutes. So the last 4 hours minimum value, and we will add to it the 20% of the ATR AED. So we do this calculation here. Okay, it's okay. We can simply do A1 plus A3, and we will define this as by execution difference, BED, and we save it. And again we bring in one more calculation expression, and this time we will need the maxima value, and from maxima we will subtract the 20% of the ATR. So let me check the current. So here is the shift 0, and we want to make sure yes high and ask price. So we are going to now deduct, oh, so this is the maxima value, and we will deduct the 20% A1 minus A2 so here we will make it as SED. In today's setup we are going to go for a market open. I don't think today we will be able to complete it, but maybe tomorrow. But I just would like to remind you. And at end point we will comparing this candle closing level with these values, the buy execution difference and the sell execution difference, and it will help us the to get the desired entries. Only when the price is within our range the execution will happen. So that was the purpose behind doing these calculations. Now I think we are almost done. Let me check if something needs to be added. So let us convert it back on hourly chart, and So this is it. So we are, I think, almost good to start building the buy side and the sell side. But I don't think time will permit us to do that in today's session. So most probably we will need to start doing the buy side in tomorrow's session, just to make sure that we have almost built the full setup. So far we will take a brief look here, and then we will be in a position to start the final leg of our algorithm setup. So yes, it looks good to me. So as I have explained to you the underlying model, the idea, the logic behind it, I think even you can give it a try. And of course, I will be back tomorrow. Then we are going to add the final touches to the setup so far. So once again, I would like to thank you all for joining in. Have an excellent time ahead. See you tomorrow. Goodbye.